Welcome to David and David on Real Estate. Join us as we explore the ins and outs of the real estate market.
Good morning and welcome to the David and David on Real Estate podcast. And today we are, David, on what episode?
Number 82.
Number 82.
Into the 80s.
Into the 80s. And today's a great episode because we're talking about the spring market. There's a lot of good news out there. And as an industry, I feel like we've had so much negative news in the last, I would say, 6 months that I think it's time that the two Davids come on and tell you guys some of the really good things that we're seeing happening in the market. And David, we talked about this a little bit before we hit the record button, but you mentioned that your office is seeing more transactions come through. You're seeing more volume. So why don't you tell us a little bit, what are you guys seeing? What's the sentiment out there? How much deals are coming in? And let's talk about the positivity happening out there.
All right. Well, yeah, and I'm really enthused about all this. First of all, just for some context, we're recording this on Wednesday, March 22nd. Okay, 2 days ago, Monday, the 20th, 5 p.m. Very important time for everybody in real estate land because that was the official start of spring. And when spring starts, there's a spring market every year. And you and I have been doing this a long time. And every year, no matter what type of market we've been in the fall and to the winter, the market's always quieter January and February every single year. And then it starts to pick up when you get into March. The snow starts to melt. People are starting to make plans. People want to get out there. And this is no different. We've been through a difficult market the last 6 months already. And there's challenges out there, but you can just sense it over the last couple of weeks that just like every other year, there is a spring market. People are getting out there. The agents are getting back to work. They've got buyers. They've got sellers. They're talking to them. Everybody wants to move. People have been sitting on their plans for a year already, and people are ready. They just need the right opportunity. They got to figure out, they need the right real estate agent. They need the right guidance to figure out what they can do, what they can buy, what they can afford, get the right mortgage advice, et cetera, but they're ready to go. And everybody I talk to is ready to go. And so I'm really excited about that. And we're feeling it in our office, which is the real answer to your question. Like our volumes are increasing. We've got way more in March than we did in February, and our March numbers are already similar to a year ago's March, which is great news. Okay, and for us, there's we always have this lag, so we're getting stuff in closing. I'm talking about closings in March. So closings in March are stuff that was written in January and February by you guys, the agents out there that are sending them over to us. So we're already seeing that for March. So that hopefully that trend is going to continue for April, May, June, et cetera.
David, we've had a long winter. We've had a long winter. It was cold. It was slushy. It wasn't pleasant. And I think people are itching to get out there. And not only do we have a long winter, but we've never seen this sort of standoff between buyers and sellers. We're still seeing record low inventory levels, right? But yes, we have record high immigration. People are coming in. I went to get my haircut a couple of weeks ago, and there was a really nice gentleman from Ukraine that was cutting my hair, brand new to the country, telling me how he's looking to buy a car and rent an apartment. And we were contrasting the rental markets because he migrated actually from Poland. He lived 9 years in Poland before actually getting his visa and coming to Canada. So it was such an interesting conversation. But you're absolutely right. People are happy. Yesterday was one of the first days where we had, really nice temperatures. People were out walking, people were outside, and people were trying to put all those feelings behind them. And there's been a lot happening in the last 6 months. There's been a lot happening in the last couple of years, right? So it comes down to mindset. I think, right? As an industry, we have to have the right mindset going into the spring market and realize that there's a lot of opportunities, but people, like you said, people are ready to really take that big step. and buy and sell and really be interested in really what's happening in the market. So I think as a professional in this industry, we have to be the good news bearer. We have to understand what's happening. We have to understand the mindset of our clients. We have to understand the pain, right, that they've suffered and that they've endured in the last couple of months. And like you said, real estate is so cyclical. And every single year, we see the same cycles coming back. Now, sometimes the cycles are a little bit stronger, sometimes they're a little bit weaker, right? But I think right now, we're really poised to have a very strong spring market because of everything that we're seeing. And one of the biggest news that came out in the last couple of days is that our inflation rate is actually falling. Right, so we've seen that it peak in June of 2022. Inflation was at about 8.1% as measured by the Bank of Canada and Statistics Canada. And then since June of 2022, we're seeing it come down, right? And Statistics Canada in the last couple of days shared that the inflation fell from 5.9% in January to 5.2% in February, which is great news for everybody. Now, they still said that a lot of the high prices that we're seeing is in the grocery sector. So, people are still feeling the effects of higher grocery prices. But by and large, the reducement or the price reduction in real estate and in the commodities and in the energy sector is contributing to a lower inflation rate. So this is good news for the market, and this is good news for our industry.
Yeah, and I think it's amazing. Like whenever we have all these factors that come into play, it happens for natural market reasons. Like there's usually you look at the statistics, and the statistics are behind real market events. Like we had such a supply issue that came out of COVID, like a purely COVID thing, with certain parts that just weren't available. They couldn't ship it. They couldn't get it from A to B. So that created a shortage of certain things, like cars, for example. They couldn't finish producing cars because they didn't have certain chips to complete it. So the price goes up. Like that's just economics 101. The price of cars go up because for a period of time, there's a shortage of cars and there's a demand for cars. All of a sudden, the supply chain loosens up, the chips start becoming available. There's more cars that get out there and the price settles again. And it's no different in real estate. It's all supply and demand, right? And all these things, and that all that affects inflation. So there's a lot of those factors that pushed inflation way up to those levels last June. And now that the supply chains are loosening up and the market conditions are changed a little bit, in certain industries, certain commodities, the inflationary prices come down. It's not magic, it's economics. It's just what happens. So what do we do in the real estate business? Like we just have to have these discussions. We have to understand why it's happening. We have to try and understand what's a normal level and what's an abnormal level and talk to our clients about that and make sure they're comfortable. That's what they're trying to figure out. They're at home trying, okay, this is how much I'm earning, and this is what I expect to get this year. This is how much our cash flow is. And we're trying to figure out what we can afford. What's the inflationary factors? What are the interest rates? And David, you probably have more information you could share with us on where interest rates are right now too, because that's a big thing. And then we have to say, okay, well, this is the world right now. This is the reality. So let's do our math and figure out what you can afford right now based on this reality. Right?
Yeah, absolutely. And I mean, David, there's so much negativity and so much negative news coming from the media right now. I mean, everybody right now is talking about the collapse of the two major banks in the United States, SVB, Silicon Valley Bank, and Signature Bank. And, the media is twisting these stories and giving us a false sense of really what's happening out there, right? So I just want to jump into that a little bit, because I think as professionals in the industry, we really need to understand what's happening and what led to the collapse of those two banks, right? So Silicon Valley Bank, there's a lot of tech companies that put their money and made a record amount of profit during COVID. People were not going out, people were sitting, people were really glued to their technology. A lot of startups happened during COVID, and a lot of technology companies made record profit. So what these companies do, they put their money into Silicon Valley Bank, right? So as companies made more money, they kept more money in the bank. The bank went out and invested that money. And the other thing that is noteworthy to note is that the administration in the United States, and their infinite wisdom, and they have much different regulations in the States than we do in Canada, but they completely abolished the minimums that the bank has to keep on reserve during COVID, which allowed the banks to go in and invest the whole sum of the money into income producing instruments, so they can make higher profits and be less tied down and be less restricted what they can and cannot do with that money that's deposited in their banks. And what's really interesting to note is that in Canada, we have a much more structured banking system, and we have a lot more regulations, and our banks are required by law to keep a lot more money on hand and not invest. So the liquidity of our banks and the available of the money that you deposit into the bank is much greater protected than what happens in the United States. So SVB and Signature Bank went out and they invested that money. Now, they invest into a very safe and secure investment into the bond market. But as tech companies earned less and demanded more of their money because interest rates went up. So the tech company said, okay, why are we keeping money inside the bank? Let us do our own investment and get a higher rate of return. So we're going to buy bonds with our money instead of keeping them in the bank. So as they demanded their deposits back, SVB and Signature Bank had to default and say, sorry, tech company number one, I know you have $3 million in the account. We don't have it to give it to you because we bought bonds with that money and our money's secured with the government, but we can't give it to you right now because it's in a bond. So what did the US government do? They just printed more money and sold more cash to these banks and pushed this problem out for another 12 months. So they basically sold them more bonds, gave them cash, and bailed the banks out. But again, what's really important to understand in this whole situation is that in Canada, we have a much more structured banking system. So the public has much more confidence in our banking system. We have all our deposits is centered into 5 large banks, and the likelihood of those banks collapsing or not being able to meet the deposits that people have their money in the bank is far less likely to happen. And this is, the whole world understands this and understands that our banking system is extremely well regulated. It's very safe. And that's one of the reasons why we have record high immigration, why people migrate and move their money into Canada from all over the world, because they understand how safe and secure it is, and mainly surrounding the regulations that we have. So I think as professionals in the industry, it's really important to understand what happened with SVB Bank and what happens with signature banks, and understand that, the FDIC, which is the federal insurance corporation that protects the deposits that people have in their banks. I mean, all they did is bought more time by printing more money and offsetting this issue for another year. So it's going to be really interesting to see what happens there. But again, the important thing to understand is that, we're not going to be in the same situation, and we're far more protected here in Canada.
Yeah, no, that's a fabulous analysis of it, David. Like really, really good. And one of the important things to know, their system is so different than our system. So the reason the government wants to step in right away to do this bailout is because they're really afraid of the domino effect. It's not that impactful when one bank that didn't look after themselves and just making bad business decisions goes under. Like that in itself isn't, that's just, bad business. But they're really concerned about the domino effect. Are people going to lose confidence in the banking system? Are they going to be a run on everybody's bank? Because I think this is not a problem with that particular bank in Silicon Valley. It's a banking problem, and there isn't enough money, and everybody's doing this. So let's get our money out before we're the last guy standing, right? So that's why they want to prop them up and try and get the word out there saying, no, 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 this isn't worldwide. This isn't institutional wide. This is, a problem that this bank went into. But their whole system in banks is so different than ours. Like you said, we got 5 banks in Canada. They're heavily regulated. They're looked at constantly. They got to keep the reserves. In the US, anybody can open a bank. You got fly-by-night bank here and fly-by-night bank across the street. And because the regulations are different and looser there. So there's way more chance of banks failing under their system than in our system. The only thing as Canadians we have to worry about, if this became systematic and the domino effect did happen, it'll affect their overall US economy, and the economic effect to the whole US economy will have some impact on our economy. But it's so far away from happening right now. And I think the fact that they did this bailout to try and stop the bleeding right away before it started was a good thing. But it shouldn't influence anybody here to think that we have an issue. And I think, like you said, people want to get their money out of other countries to put it in Canada, and they want to invest in Canada, and they want to invest in Canadian real estate is one of the safest investments as well, especially GTA investments. The values are going to always be there because there's always going to be a demand for people to live here.
David, I think it's good news for us. I think this illustrates and really hits home the point that we are a very safe economy. The rules that we have in place surrounding our banking system, is preventing situations like this happening. People want stability. David, there's been, a lot of wealthy people that have been, their whole wealth has been wiped out because of, holding their money in SVB. The FDIC, which is their federal insurance protection company, only protects deposits up to $250,000. So if you were a tech billionaire and you had, let's say, $50 million in SVB Bank, guess what? You got a check back from them for $250,000. You lost $49,750,000 of your deposits that were in the bank. Like that is, we're talking about some serious consequences here. And in fact, I know many wealthy people in the United States that have multiple accounts in different banks to spread the risk and control and migrate the risk of something like this happening. So now imagine being a wealthy person in the States and you have your wealth in 20 different banks. Oh, I think I'm going to put 5 million here and 5 million here and 5 million here and 5 million in a different state. And maybe I'm going to call and open up an account in California and put 5 million there, right? And this is how these people think, because they have to take certain steps and certain protections that we as Canadians take for granted, right? But the whole world is looking at this and saying, wow, if I'm going to invest and I have 20 million or 40 million or 50 million or 100 million, where am I going to bring my money, right? Look at what's been happening historically to our real estate. Then factor in the AAA banking rating that our banks have, then factor in all the other layers of protection and all the other regulations. And we complain about it all the time. Our taxes are high and, the government's looking for this fee and for that fee, but there is a safety net around us, right? And I think this is great news. And I think as Canadians and as professionals in this industry, we have to be able to really articulate what happened in the States with SVB and Signature Bank, not to say, oh my God, look how much better we are, but look, we have to be able to, as professionals, articulate what the differences are and why real estate continues to be the best investment. Now, I can go deeper in this, David, but what boggles my mind is that a lot of these investments that these banks are making into these bonds, right? The US dollar is not backed by anything. In the 70s, they took it off the gold reserve, right? Before, the dollar was always backed by gold. So at any point in time, the whole idea here is that you can go in and trade a dollar for a piece of gold. So one is tied to the other. But as the government wanted the ability to print more money and print an infinite number of dollars to circulate in the economy, they had to remove and not have it tied to the dollar, because they were printing so much money that they lost what the ratio of dollars to gold was supposed to be, right? But think about it this way, David. When you buy a house, what is your money secured by?
It's secured by the real estate.
By the real estate.
By the house, by
right?
the real estate.
You have something tangible. You have something
that's
is
an asset.
real. You have an asset that you can touch, you can live in, you can rent, you can, it's liquid. Like it is the best and safest investment you can make. And in terms of high inflation, it is the best thing to do with your money, is to put it in a hard asset that is growing in value. Right? So I think this is great news. I think, the collapse of the SVB Bank, the collapse of Signature Bank, I think as an industry, I think we have to be proud of our Canadian regulations, of our Canadian system, of our Canadian banking system. And I think we need to speak to this. I think we need to reach out and tell people, look, if you have friends or that are overseas, that have money overseas, that are in Europe and Asia and different parts of the world, bring your money here. Right? We have a safe environment for you to invest. And not only do we have a safe environment, but I am going to make sure that we protect your money by one of the best investments in the history of time, which is
real estate. And we also have to know, the source of this problem and where we get our news from. And I think we've talked about this before too. Like, this is an issue in the US. And how do we get the information about what's going on in the US? If you watch American news channels and read, it depends where you're getting your news from, because they're so polarized in that country in terms of how they want to spin the news. And there isn't a network anymore that just says, oh, this is that does the analysis that you just did. This is what really happened. You're watching it on one news channel, and it doesn't matter what the facts truly are. They just want to blame it on the president. They want to blame it on the current government in the US. And they try and make it all about that. So, and to say, oh, this problem is going to continue until we get to our next election in 2 years to replace this president. And they try and make it all about that. And so then you turn to another network, and it's got nothing to do with the and they're back and forth and just talking politics. They make everything there about politics. So you got to be careful what your news sources, because you listen to to one half of the news sources, and they're trying to make this is a worldwide epidemic. This is the start. This is all Biden's fault. He started it. The failure of the banking system, his fault, and the whole world's going to be affected, and the sky is falling because of the president in power. And it's got nothing to do with that. It's got nothing to do with that. Yes, he can have an influence on it. There's certain things he could react to it, all that stuff. But it doesn't happen because of his decisions. There's a bank in Silicon Valley that made some really bad decisions. Right?
Yeah, I mean,
so we got to be careful. So anyway, the point I'm making is the sky is not falling. If you're listening to those newscasts and change the channel, like get another news source, just find another perspective to know it's not really, there's a problem there, but that's their problem. So don't be led to believe that because there's a problem there, that should stop us from living in Canada and going out to spend money and doing what we want to do here. It's got nothing to do with it. So do your research, do your homework, be educated, understand what's going on there in analysis. Because like you said, Dave, we have to have an ability to discuss these things with our clients, with potential clients, people that want to invest in real estate and things like that, because these are real conversations. People have to have confidence in the market in order to get out there. Now, the other, good piece of news, David, you could elaborate on this, is mortgage interest rates and the trend that's now on. You want to talk about that a little bit?
Yeah, no, absolutely. So we're seeing bond rates go down, right? And usually when there's a decrease in bond rates, there's going to be a decrease in fixed interest rates, right? And you have to understand how those two work together. And I can go into it just a little bit. I don't want to spend too much time on this, but basically, as people keep more money in the bank, right, and the bank is able to invest that money, they're able to give people back a fixed rate of return on that money. So that's why the bond rate is tied directly to the interest rate. Now, as the bond rate goes up, money becomes more expensive for the bank, right? So then they have to increase fixed interest rates proportionally. But as bond rates drop, we are seeing more competitiveness among banking rates, right? But banks, tend to drop the fixed interest rate, not as quickly, because of course, as the yield between those goes higher, their profit margin increases, but eventually they do drop interest rates. And we are seeing that there is a number of banks that have already made an announcement and are dropping their fixed interest rates by between 30 and 60 basis points, which is good news for the market.
Right. And it's great news for the market, but I think an important point to remember, though, too, and if you go back to last August or September when we had our economist friend on with us, and we were discussing, where should interest rates ultimately be, and he told us then interest rates are going to go up. They might continue to go up even until late spring, or possibly into the summer of 2023. You don't know the crystal, you don't know for sure. He says, but then they're going to start to come back. After they go up, they're going to start to settle back. And maybe that's where we're starting to see that. But that gets us into more of what he described back then as a normal market. So don't be thinking, okay, if it's coming down, they're going to get all the way back down to 2%. Like, that's not happening. So make sure nobody out there thinks that that's going to happen. But he said in a normal, good moving economy, it will settle, and interest rates should be somewhere between 4% and 8%. So it'll be, maybe around 8% on the high side, and it might creep down to close to 4 on the low side. And most of the time it'll be somewhere in between, but it'll go up a little bit, it'll go down a little bit, but it's going to be in that range. When we were at 2%, that was the abnormal market. When we get to double-digit interest rates, that is an abnormal market. So right now we're really in a pretty normal market. So let's get everybody out there to think, okay, this is where we are. And it might go up a little bit next week, it might come down a little bit, but we're going to be in this general range. So figure out what that means to you, what you can then go out and borrow, what you can afford to pay based on those type of rates. Don't be waiting for it to come down to 2%, because it ain't happening, right?
Yeah, absolutely, David. And, this leads us to our second part of our podcast, right? Which is, there's so much noise out there in the marketplace. There's so much noise. And, I am really encouraging everybody listening to this podcast to block it all out. Ultimately, it doesn't matter. None of this matters. What matters is that right now, realtors need to stay hyper-focused on doing all the small little things to keep building their business, keep providing value to their clients, and keep forging forwards to do more deals. More revenue is always going to fix all your problems. And if you get caught up in all this negativity, what's happening with SVB Bank? What's happening with Signature Banks? What are bond rates doing? What's the inflation rate? What's the unemployment rate? Who cares? People have to be buying and selling. We cannot control price, right? I don't understand realtors' obsession with price. Price doesn't matter to us as our industry. What matters is a number of transactions. We need volume. Your office needs volume. My office needs volume. And realtors need volume in terms of number of transactions, right? So block all that negativity out and start doing what you need to be doing every single day. Get off scrolling Instagram, get off watching YouTube videos, turn the news off, and buckle in, work on your CRM, and do all the things that you need to be doing every day to stay hyper focused on achieving your goals.
Well, that's a great point, David. And I agree 100% from my business point of view and from your business point of view too. Price is totally irrelevant. If there's a real estate agent out there saying, oh, I hope I can get $1 million for this house because my commission on that, I'm going to get 2% of the $1 million. So that's why I really want to push them up to $1 million, because if we sell it, or if we buy it for only $980, I'm losing 2% on that $20,000. Like, you can't be focused on those little numbers. Like, the price should be irrelevant. What you need to do is make sure you get the transaction. Okay, you need the transactions. You need the commission on 980 and not lose it because you were trying to get it at $1 million to earn a couple more dollars. That should never be the focus of a real estate agent. You need that client to be able to buy that house. That's good for that client. Okay, do what's best for that client, and the transactions will happen. When the transactions happen, you get more referrals, you get happy clients, and you're going to get way more than that $20,000 that you were trying to hold out for in the big picture. And from my point of view in our office, like, price is irrelevant. Like, it doesn't matter what houses or condos sell for. It doesn't matter. We need transactions. If no one's closing, we can't charge our $980 to close a transaction. We need volume of transaction. We need numbers of transactions in our business for us to be healthy. And the same thing from a real estate agent. But you need to have your deals. Okay, so price isn't important. Now, it's important to your client, but it's up to you to make sure it's not the most important thing. It has to be affordable. Everybody likes to feel that they got it at a fair price, but that's your job. You show them, yeah, you got this at a fair price, and there's certain market conditions. And maybe a year ago you could have got it for a little less, or maybe you would have got it for a little more. Maybe a month from now it'll go up in value. Maybe it'll go down in value. But the time you're buying it is today, and you got to have all the best information today. You make your best deal today, and it's your role as an agent to manage your clients' expectations and make them feel they got a good deal. They did the right thing. They're making the move that they've been dying to make, and you're helping them do that. And you keep focusing on that part of it, and the transactions will happen. And the transaction happen, you get paid, you get commissions, and you rather get a commission on, you get zero if you don't get the deal. If you get a deal done, you get a commission. It's that simple.
We all know the realtors out there that will overpromise and underdeliver, and that just creates a negative situation, right? If you go in and say, hey, I'm going to get you $1 million, and the house is really only worth $950,000, well, there's an example of a realtor focusing on price,
right?
And which will result in a negative outcome, because there's going to be no transaction at the end of the day.
Right.
So as realtors, we have to focus on, getting the transaction completed. Right, price is controlled by the market. Now, of course, there's a lot of things we can do to influence price. Make sure that the branding is great. Make sure that the picture, the videography is great. Make sure the write-up is great. Make sure the house is staged. Right, make sure that it's marketed properly. Make sure that buyer who is willing to pay the best price for the house and knows about the listing. So you have to make sure that you're marketing it properly. Right, but ultimately, we're in the service industry, and we're here to perform a service, and that service is to get the property sold, right? So that's what we have to focus on. And I think, doing transactions and being transaction orientated and being a deal maker and not a deal breaker is the number one job of realtors, right? So, David, I hope everybody that's listening is hearing that there's so much good news. Right. There's so many things that are positive that are happening in the industry, and you hit the nail on the head when you started the podcast talking about the weather. That's important. People need to feel good. People need to come out. People need to want to get out of their homes to start this process. Right. That's the first step. Yeah. But other than that, we're seeing a lot of other things really fall into line as well. Right. So I think the important message is for realtors to really get out there. Be hyper-focused, right? Be the bearer of good news and go out there and build your business. There is so much money for the taking out there. You know why there's so much money for the taking? We have 72,000 realtors. And I bet you if I got, all of them in a room, 99% of them would have a negative mindset right now because the media has been bombarding us with so much negative messages that it's becoming contagious. And it's unfortunate, right? So we want to change that. And we want you to be the bearer of good news. We want you to be excited about what's happening right now. We want you to be excited about the market. We want you to be excited about the opportunities. We want you to turn off all the noise, sit down, buckle in, and do all the hard things that you need to do in order for you to go out there and do more business.
I'm sure every agent out there knows a bunch of clients, past clients that are potential sellers right now that they should be contacting, because it's a great time to sell right now. There's still a lack of inventory on the market. So we are seeing and hearing all kinds of stories of in certain areas in particular, where when something does come on the market, there's multi offers because there's way more buyers out there right now than there are sellers. So we're still seeing multi-offer bids and some crazy stories. One I was told the other day was it was over 50 registered offers on one little property that was worth about $1 million. That wasn't even worth $1 million, but it got pushed back up to $1 million because there were so many offers on it. So you hear stories like this out there because there's just still a lack of supply. So everybody should be contacting their networks and circling back to people that they've acted for in the past that you think might be ready for another move, and you can talk to them about it. And it's a great time for them to sell. And depending on where they're going and what their plans are, it could also be a great opportunity to buy. So, and as an industry as a whole, we have to encourage everybody we need more supply out there.
We really do. That's the biggest.
That's the key
in the marketplace right now. So, realtors need to go out there and be that support system, have the conversations, reach out to their network, and encourage people to come to the market. That's the first and foremost. We gotta cut this bottleneck out of the marketplace and out of the inventory, right? So we need more listings out there, and as realtors and as professionals, we're the first step to that, right? And I think being the good news bearers and having those positive conversations will go a long way to getting people to feel more comfortable about where we are, right? But again, it needs to come from an education-based and a knowledge-based approach. Like, you really need to understand what's happening out there, where we are. The spring market's around the corner. We're going to see more activity. There's great things happening. We have a great environment. Interest rates are coming down. There's downward pressure. Inflation rates are getting to that 2 to 4% threshold, which is where the bank wants them to be. Now, I don't think the bank is going to be rushing to really decrease rates anytime soon. I think they've done that in the past, and they're aware that there's a lot of demand and still a lack of inventory in the market when it comes to real estate. So I don't think they're going to rush to lower rates, but at least we have a very clear indication that there's a high probability that rates are not going to increase in the near future based on everything that's going on, which I think is great news, right? It puts a little bit more certainty into the market. And it gives people a little bit more certainty about what's going to happen in the near future as well.
Yeah, and I think it's important, like you say, David, to get the word out. And you and I are trying to do our role, and we're trying to encourage others to do the same. It's why we talk about this on a podcast. It's why we're active on social media and pushing things and promoting that there's a market and get out there and doing things like that. And you have everybody else that's watching or listening should be doing the same thing. It's why, like I'm doing 4 seminars this week. I did 2 in-person seminars Monday and yesterday, and I've got 2 on Thursday. I'm looking for opportunities to talk to people, talk to the agents, get the word out. So yes, we have topics that we're going to be discussing, but part of the discussion we have every time I'm out there with a group of agents is to talk about these things. What's going on? What do you find out there? What can we do? How can we help it? Because we can all be influencers to some extent. We have to encourage each other. We got to have a positive attitude. We got to get out there. And I really get a sense that, that we've turned that corner. We are into that spring market, and we got to just keep spreading the message and encouraging everybody to get out there and do the same, and make everyone feel if you're not part of this, you're going to miss it. You're going to miss opportunities, and your clients are going to miss opportunities. And so many people have been just sitting, waiting, and they're not sure what they're waiting for, how long they should be waiting. Well, you got to get the message out. There is no reason to wait. There's a good market right now. There are opportunities out there. Let's explore them, figure it out, and get out there, take advantage of it.
Absolutely. And, never eat lunch alone. Like, that's a big one. Call your clients, call other business owners, call other people that are potential clients and take them out for lunch, right? So one of my mentors told me never to eat lunch alone. I love that. But collaborating with local business, this is so important. And I do this all the time. Whenever I walk into a business, I say to them, look, I shop here all the time. So I want my clients experience all the positive things that I experience. And I say to them, look, if one of your clients buys or sells a house, I'll give them $1,000 gift card to your business. That way I'm supporting you. And business owners love that. Why wouldn't they? Right? They know, and the statistics surrounding gift cards is pretty extraordinary for anybody that's done the research, but 70% of gift cards are never redeemed. So think
Really?
about that from a business point of view, right?
Really?
Yeah,
They sell it, they get their sale, and they don't have to, and people
never
don't
provide the product, right? Which is,
Really?
It's quite extraordinary, right? And these numbers were even higher a couple of years ago because there was a 1 year statute, there was 1 year limitation. So gift cards were only good for 1 year. And then the government came and said, no, we're going to take that out. They're good indefinitely because it's really, you're trading money for a gift card. So it should have the same power as money. But even the statistics are quite mind-boggling. So I encourage, if you're watching this podcast and you're considering doing something like this, go check out the statistics about the redemption level of gift cards, right? So that's why a lot of the times you can buy $100 gift card in a relationship like this for pennies on the dollar, because you can prove to the homeowner that, hey, if you sell me $10,000 worth of gift cards, you're only going to get about $5,000 of that redeemed. So why am I paying you 10? Like, let me pay you 6, and let's do some advertising together, right? And I'll push more clients your way.
And I'll promote it.
And I'll promote it.
Giving a gift card, and that's worth as much as actually giving out a gift card.
Right. And then 9 times out of 10, the people who do come in will spend more than the gift card value. So you're going to get a repeat client because they're going to get to see how great your services are. So, I mean, it's just a fabulous way of promotion and cross promotion. And then you tie into their network, get them to advertise that on their social media. Hey, come and buy a croissant. And by the way, if you're looking for a great realtor, David Gorski has been a client here for 10 years. He loves our croissants, and you're going to get a lifetime membership of croissants, right? If you just do business with him and buy a house with him. And then all of a sudden, their whole network is promoting you, right? And you're cross promoting each other. It's a great way to help local business. And it's the smaller businesses that love doing these things. So you're promoting great small businesses in the community. It's a great way to get your brand out there and collaborate and cross promote businesses together.
Well, that's a great takeaway that anybody can take from this. And they should, if they're not sure how to do it, they should contact you and get the specifics of a good way to approach it. But it's a win-win. You do something like that, good for the business that you're promoting. And like you said, they end up buying more than the value of their gift card in most circumstances. Like Tim Hortons is even doing that with the roll up the rim. Like some of the prizes, it's not just, roll up the rim and you get a particular prize. Some of what they're giving you is you get your win is actually, you get a discount at some company to buy a product from them at a discount. Like that's what's being promoted there. So you actually have to spend money because you're going to buy something. But that's how Tim Hortons is promoting other companies, as opposed to just giving a briefcase. It's no, you can buy a briefcase at 50% off with your roll up the rim coupon. and now you got to go to that company and buy something and you get a discount for it. But it's a way they're cross promoting that way. And I think your suggestion is along similar lines. And it's great for local businesses, and especially if you're doing businesses that are related to real estate too, that are selling stuff, the home renovation products and things people are going to need for their homes, right? Do it with those businesses too, because that really helps the industry as a whole too.
Yeah, it does, but they don't necessarily have to be. Like, if you go to a small coffee shop, like, you can get really creative. You can say, hey, listen, how much would it cost for me to buy a gift card that would allow one of my customers to have one coffee for 1 year on me? And you can come up with a price, again, knowing that the customer is not going to come in every day. They're probably going to come in twice a week. So, what's the real hard cost? And then what's the store owner's cost on that cup of coffee? And, because he's selling these in bulk and in volume, is he willing to take a little bit less of a markup? And what does that really look like? But then from a promotional point of view, imagine saying to your customers, hey, you want to move into Riverdale and go to that really famous coffee shop that everybody in Riverdale goes to? Well, listen, buy or sell with me. You get a cup of coffee every day of the year for free. Like, there's such powerful marketing that you can do. And now you're promoting a great little coffee shop in Riverdale, which is where you want to build your business. And it's that whole community feeling. And anybody that walks into that store, the regulars, the homeowner is going to say, or the store owner is going to say, hey, look, you want to save some money? Why don't you buy or sell with that realtor, and you get a cup of coffee on them for the whole year, right?
Yeah.
And in that store owner knows that they're not only going to come in for the cup of coffee, they're going to get a donut, they're going to get a croissant, they're going to get a sandwich, they're going to get a piece of cake, they're going to buy something else. And every single time they come in, he's guaranteed that money up front from the realtor, but he's also going to make further sales every morning and attract and build more loyal clientele, right? We're habitual creatures, right? So if you can do something for 21 days, that becomes a habit.
Yeah. Yeah. Well, and I love the enthusiasm, David, and the thinking out of the box. Okay. And you've given us over our 81, now 82 episodes, so many of those moments where you just sit down, okay, like, what can I think of now? What's different? What can I do that's going to make a difference? That's a different approach. And I think it's great that you think out of the box and you pass that on to others. No, it's not, you come up with an idea and say, okay, I'm going to keep this to myself. I'm going to be the only guy sending people to a croissant store in a community. No, you get, like, everybody should do this. Like, everybody should try it. Find your own version of this, but think about it. But bottom line, think out of the box a little bit, and how you can be a little bit different, how you can be noticed, how you can be appreciated in different fronts, and then you become someone that people want to refer to.
Yeah, and think about it from this perspective. Entrepreneurs or business owners are entrepreneurial in spirit. They'll appreciate the passion, they'll appreciate the enthusiasm, they'll appreciate the out-of-the-box thinking that you as a realtor have. And that's more likely to get them to want to promote you and do business with you, right? So I love these approaches, and I love these out-of-the-box ideas. And I think this is what sets, the really gifted professionals apart from the ones that, are mediocre. And like I said, 70,000 realtors in the market. You got to do something that's going to make you stand out and make you differentiate yourself in the marketplace. And if you can use somebody else's power in terms of collaboration to build your business, I think that's very powerful.
No, I agree with you. And I think it's great. And everything we can do from your point of view, from my point of view, from our collaborative point of view on David and David Real Estate to promote and encourage. That's one of the things we want to do from day one. We first started talking about this, and every once in a while, it's great that we have these type of podcasts just to discuss this. And this is a great opportunity. And it's like spring is in the air, and there's so much positive news out there and opportunities out there. And it's great to be talking about these and be encouraged and encouraging others to get out there and do it. And let's get out there and let's get transactions done. And I think a lot of people are doing that already. Anything we can do that helps influence them to keep it going and do it a little harder, or be a little more creative in doing it, like why not? Like, why not?
Absolutely.
So,
And talking about mindset and opportunity, next week we have a very special guest coming on the David and David on Real Estate podcast. We have Kathleen Black, and she's one of my favorite real estate coaches. She talks about shifting your mental state and really going after more business. She's absolutely wonderful what she does. So I think this is going to be a great segue to the next episode.
absolutely.
Get into that mindset, but
Right.
really looking forward to that.
Yeah, she'll take it to the next level, and as enthusiastic as you and I could possibly be, we can't reach her levels and express ourselves the way she can. So it's perfect timing for having her join us now that we're into this market, and I'm really excited to hear what she's got to say.
Absolutely. As always, guys, thanks so much for tuning in. Have a great week. Join us on our next episode. And if you have any questions, reach out to us. David Korman and I would love to hear from you. Love to take your questions. Love to discuss your questions on the air. And stay hyper-focused. Right now, you need to stay hyper-focused on crushing your goals, and tune out the negative media and be that bearer of good news.
Absolutely. Have a good week, everybody. Enjoy the beautiful weather that's coming and the beautiful opportunities ahead.
Thank you, everybody.